came to the conference room or who tuned in. We're talking about April production and a little bit of a look back at March production. So that 2-month lag is built in there. I would have to say, really good news all around. We had a 1% increase in our daily oil production. Kind of expected a little bit more, but as you recall, we were still struggling to find spring back in April. We had a 2% increase in natural gas production. And so once again, we're starting to get back on that trend of increasing gas oil ratio. I think, we talked last month and Justin had some maps where he showed you how significant the rig movement is out of the core and into the tier 2 and 3 areas. And that continues to hold. When I was looking at the rig map this morning, it was surprising how most of the rigs are outside that core area now working in lower gas oil ratios. But even in spite of that, we're seeing that gas oil ratio go back to climbing. So when we balance and we look at the revenue forecast with regards to price, we were in April right on the revenue forecast price and 13% above on oil production. So again, very strong revenues coming in, and it's going to be a strong finish to this fiscal year and this biennium. As we move forward, looking at it today, it might be a wash. It looks like we're about 12-13% below revenue forecast in terms of price currently, but it looks like pretty strong production for May and June in terms of oil production. Natural gas prices aren't helping us any there, but we'll talk about that in just a minute. I want to compliment the industry. Kudos on a new record in terms of gas capture, almost 3.2 BCF a day captured and put to market. And that's a new record for the state. So that's really positive. And when we look at page 3 of the director's cut and we look at gas capture, we'll just jump over there. The word I came up with was wow. We have never seen 98% in gas capture before. And so we have 2 areas on Fort Berthold Reservation. Remember, we always used to talk about the difficulty in getting right of way and getting infrastructure built on Fort Berthold to capture the gas. But the commitment of some of our companies like Crestwood and MPLX and the others that are gathering gas, Targa on Fort Berthold Reservation, as well as the commitment of the operators is really starting to show up. And so those are impressive numbers, and that brought our overall statewide Bakken up to 96%. We've only been there one other time, and that was October of last year. So really strong numbers coming in the gas capture area. And when you look at the current price of natural gas, that's pretty remarkable. At $1.51 an M and 16% above the 5-year average in terms of U.S. natural gas storage, and a 43-to-1 ratio between oil and natural gas prices. It's remarkable how committed they are to gas capture. So, real kudos to the industry with regards to that. I'm really happy to see that. I think the other thing I want to talk about on the first page is the strong commitment to duck wells. We're really seeing, we had one operator that owned about a third of our duck well count, and they have a really robust program going starting in April and really kind of beginning in April, consistent in May, and it's going to be strong through the summer of bringing that duck well count down. And so you saw 138 well completions. That's almost triple normal and well above what we had in the revenue forecast. And that's showing up in the waiting on completion wells coming down as well. So that's very encouraging. When we look at one other aspect I want to talk about in terms of wells is I've started reporting what we're doing through the Investment, Infrastructure, and Jobs Act. As you recall, North Dakota got a $25 million grant. That $25 million is intended to plug 88 orphan wells and reclaim all 88 of those sites, as well as another 50 actually 51. So 88 pluggings, 139 reclamations. As you can see, we're 29 wells into the plugging. As of May, we hadn't started the reclamation, but it is well underway now. I think the last week of May, the first crew went out and started the first reclamation. So we don't have any completed reclamation to report, but we'll keep tracking this for you on a monthly basis. You can find it on our website as well. But we've spent $2.2 million so far out of the 25 million, and it should take all 25 million to deal with the 88 wells and the 139 sites. That's still going to leave a little loose change out there. I think that's going to leave us with about 15 wells that are on federal lands that we're still figuring out a way to get to agreement with the Bureau of Land Management and the Forest Service on plugging those wells. And of course, that'll leave all of those well sites. So there'll still be some work left out there. That's going to flow over into the formula grant phase of the IIJA, or EJA, as we fondly call her. Her nickname is EJA. And the EJA formula grant program is going to be $5 million a year. $11 million a year for 5 years. So it'll be about half on a per year basis of what the initial grant money is, but it's over a 5-year time frame. So that's going to allow us really to bring all of this orphan well stuff to a close over the next 5 to 10 years. We're still struggling rig count wise, and there's a combination of factors built into that. Part of it is still, coming out of the road restriction time frame. When we look at today's rig count, though, why hasn't it really bounced back? Two of the big reasons are mergers and acquisitions. So we've seen some substantial acquisitions and well transfers of recent, and the operator exiting, of course, drops whatever rigs that they were operating, and the new operators don't have those drilling programs built into their budget yet. So we're seeing mergers and acquisitions put some downward pressure on our drilling rig count. But the frac crew count is very strong. Like I talked about, the duck well program is got that frac crew count up at 20. We are still anticipating a significant number of folks coming from the Ukraine to supplement our workforce, and so we're looking forward to that. I believe the first 25 of them will arrive yet this month, and so that'll kind of set the tone for how fast we can move forward with that. The next thing I want to talk about is oil prices and worldwide production. So you probably saw the headlines that Saudi Arabia, in an attempt to move that target price back towards their $80 a barrel target, made a unilateral cut of 1 million barrels of oil a day, which brings the total OPEC plus cuts to almost 5 million. And the market said, meh, and that's, really kind of surprising. But there's a lot of uncertainty about global economics, still concerns about the Chinese economy and the European economy. And on top of that, we're going into the season when, we have a changeover from winter fuel blends to summer fuel blends. And so that tends to suppress oil prices as the refineries make those changes. So I don't think there's anything alarming there, but I think all of us, including the Saudis, expected a stronger response to that 1 million barrel a day cut, and I was surprised that the oil markets just shrugged it off and really didn't respond at all. Two things on the federal front that are very concerning to us, and you'll see comments coming out of the Industrial Commission. One is on the new BLM conservation rule, I'm going to call it, and the other is the EPA greenhouse gas rule. Both of those are very problematic for our North Dakota oil and gas industry. very problematic for our coal industry and gas processors. And so we'll be strongly pushing back in our comments on those two things. We did get one question ahead of the director's cut. It's about a transfer of an oil pipeline, and Justin is going to speak to that. He's got the information and an answer for you on that. So with that, Bethany, I take some questions. Okay. Yeah.
Well, what is your outlook for the remainder of this calendar year? In terms of price, terms of production?
Great. So the question from in the room here was, what's the outlook for the remainder of this year? It's kind of amazing. We're almost half done with this year, isn't it? So what does the remainder of the year look like in terms of price and production? We're still anticipating close to a 2% growth in production. So, we think that we could see another 50 to 100,000 barrels of oil a day in terms of production by year end. Oil prices, I think that this slump is temporary, and the Saudi cut really will kick in next month, and that along with and that's going to be on a month-by-month basis. But the other 4.7 million or 3.7 million barrels a day is scheduled to stay in place through the rest of the year. So I think we're looking at a good solid $70 to $75 a barrel price range, and definitely a 1%, maybe a 2% growth in oil production by the end of the year. So we should finish this calendar year in really strong shape in terms of North Dakota's oil industry. And if this program, this workforce program, works as well as we hope, we're going to see that rig count bounce back, and that adds a lot of dollars to North Dakota's economy. The great thing about these folks is they're not going to be long distance commuters. Nobody's going to be commuting to North Dakota back and forth from Ukraine. They're going to come here and they're going to work. And so that's going to be very beneficial to the local economies in terms of housing these folks and feeding them and putting them into the workforce and collecting their income taxes and all of that. So it should be a good second half of the year. It's not going to be outstanding. We're not talking about like the boom days when we were climbing towards 1.5 million barrels a day, but we ought to be able to finish the year in that 1.2 million barrel a day range with $70 to $75 oil prices. Natural gas is a whole nother matter. There just is not a lot of promise on the near-term horizon. I think Justin's going to talk a little bit about some longer-term solutions, but we have got to get the East and West Coast, the federal government, to permit LNG export facilities, because we are just sitting on a massive amount of natural gas coming out of here and Oklahoma, the Permian, and the Marcellus play. And that really is the short-term solution to carbon emissions worldwide. And the best way for us to support our allies in Europe and in Asia is to really get on the ball and start exporting LNG to those folks. Long answer to a short question.
It's a follow-up because Princess Cruise Lines has already announced it wants to convert its entire fleet to LNG.
That's fabulous.
Cruise lines are probably doing the same thing. So I didn't get a chance to talk to anybody about would you buy it from North Dakota, but there's no way to get it there right now.
Right. There's just no way to transport LNG to a market from North Dakota. But if we can shift, for example, Permian, New Mexico and Texas gas, Oklahoma gas to LNG facilities, then that creates an open market for North Dakota gas. And so it'll redraw the whole transportation and marketing landscape. But overall, we've got to start moving U.S., North America natural gas into the LNG markets. And, that's great news, because the intercontinental, international shipping industry is a huge user of bunker crude right now. and shifting all of that to LNG is going to be one of the biggest things we could do in terms of carbon emission reductions. Anything?
When is the next BLM sale scheduled? Resale?
The next BLM scheduled sale is 2 weeks away. And there were a few parcels that were withdrawn, but it's my understanding that there's 46 parcels up for sale. So we'll get through that, and then it'll be time for us to make another report to Judge Traynor and see if the BLM has gone back and taken a look at those 800 parcels that are out there in the wings. 46 doesn't seem like a lot when you've got 800 nominated parcels over the last 10 years. So, but the lease sale is scheduled, and hopefully it will go off here in 2 weeks. I think it's actually June 23rd, and we won't get, a follow-up lawsuit. That's what happened the last time they held a lease sale. Was they sold the parcels, but then there was a lawsuit filed and an agreement not to permit them. So all that happened was money was transferred to the federal government for the lease bonuses, but no new wells get drilled. So we'll stay on track with that. Thanks.
Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. Just wrapping up the production from our neighboring states now, settling in around that 1.2 million barrels per day when we combine the Eastern Montana, South Dakota volumes along with North Dakota. At this time, neither Eastern Montana or South Dakota has any active drilling rigs, and so we're seeing all the activity now concentrated on the North Dakota side of that border. But that doesn't mean that there aren't opportunities primarily in that Eastern Montana area as we look out longer term. On slide 4, when we look at those month-to-month changes, for those of you, I'm very visual, so I always like to see the kind of trends there. So again, just very modest growth when you look back at what we've seen historically on some of those month-to-month shifts. And so again, the thing that I always watch closely now is that GOR, that gas oil ratio in the bottom section. As Lynn mentioned, we're starting to see that uptrend again. I'm anticipating that, again, we're going to stay on that long-term upward trend. We're going to see month-to-month fluctuations depending upon where completions are in any given month. But we're in full expectation that upward trend is going to continue. When we look at crude oil movements in April, when compared to the March numbers, we saw a bit more crude oil market share leaving by rail car out of North Dakota, about a 2% shift month to month. We were seeing that Brent WTI spread again, those waterborne barrels versus the domestic mid-continent barrels hovering around that $5 spread. And again, if you followed this long enough, you know that's one of those areas where we start to see things shift a little bit. When we look at what refiners were paying, at least in March, the latest that we have available, Pad 1, Pad 5, highest priced markets, Pad 2 slipping back there, about a $7 to $8 discount relative to those coastal markets, and then pricing picking up again once you get to those Gulf Coast areas where export options become available. When we look at those shifts and where we see those estimates for rail volumes in aggregate leaving the region, again, hovering around that 80 to 90,000 barrels per day roughly in the month of April, which is, again, just for context, one unit train, if that's how you like to reference, is about 70,000 barrels per day. So we're just over a unit train per day on average exiting the basin. We saw in March a drastic shift, and we saw in February a drastic shift in where those barrels were going. March continued that, where we were seeing Pad 5, which is the West Coast, primarily the extreme Pacific Northwest part of the U.S., taking the lion's share of those barrels out of the Bakken. After seeing this again 2 months back to back, I didn't have a chance before we came in here this afternoon, but I want to dig a little bit into those Pad 1 volumes. That those refiners on the East Coast, they are tied to either waterborne or railed barrels. And we saw even, some fluctuations when Russian sanctions went in, and when you're tied to either waterborne barrels or rail. I'm curious where they're picking up those barrels that they're not currently getting delivered from the Bakken. So we'll see if that's any type of indicator on any longer term trends. When we look at pricing today, you can see Clearbrook still at that premium $1.69 is the latest. The LLS, the Louisiana Light Sweet down on the Gulf Coast, again, another just comparable barrel to a Bakken type barrel for anything coming down on DAPL. And then that Brent WTI spread still in that close to $5 range. This is probably as good a time as any. There was a question that had come in about the MHA Nation and the Plaza Waback pipeline that Enbridge formerly owned and the sale of that to the MHA Nation. When we look at some of the intent behind that, obviously there's a couple things at play. When we look at the Enbridge system as a whole, as it exits North Dakota, I apologize, I don't have a map handy, but those barrels exit to the east out of North Dakota. They head through Clearbrook as the first marketing point, and then continue to the Great Lakes areas of Chicago, Sarnia, as they had even and open up options for some of the Great Lakes Canadian refining complexes. Those barrels can also continue down to Cushing. So there's a tremendous amount of marketing flexibility for any barrels exiting on that Enbridge system. So when you look at the economic incentive for the MHA Nation to take ownership and reactivate that pipeline, Clearbrook, that market's been phenomenal the last year and a half. And so barrels moving through that area, which this line would connect them into, very, very strong pricing. It looks like a great strategic move. That 15,000 barrel a day pipeline, it's a 6-inch. When we start to look at it from a localized impact, right? What does it mean to the folks living and working in that area? A 15,000 barrel per day pipeline equates to roughly 150 truck trips, both directions. So 75 loaded, another 75 empty heading back to the field. So that system now is removing 150 trucks off those roadways. So when you look at it from a logistics, a safety, and just the overall experience for those living and working in the area, that these type of systems have significant impact. So again, there's the economic side, but then there's also the safety and the efficiency side, which again, it's very encouraging to see. So again, just quickly wrapping up, no major shifts. We saw a slight decrease in the amount of crude oil coming in from Canada into North Dakota in the month of April, but no major shifts in those exports. Steady on the differentiation between why gas was being flared at various well sites around North Dakota. Again, consistent 1% from facilities that don't have sale connections, and the remaining 4% of that statewide flaring coming from facilities where the pipeline system just could not handle all of the gas being produced. And now we've got 4 straight months of consistent numbers, and I think Lynn laid it out very well. It's incredibly encouraging to see the dedication. I mean, we're seeing it improve in the numbers. Again, those conversations and folks continuing to keep their eye on the ball here, figuring out, this is a great position to be in, but we know that we can't, step back even for a moment, and continuing to look at what steps are going to need to continue to take place in order to keep North Dakota in a great shape. In April, we saw a few more wells producing than wells selling gas, which if that was any type of long-term trend, we'd get concerned. 1 month is not overly concerning, but we'll keep a close eye on that. The EIA did, after the OPEC announcement that Lynn was chatting about, they had upped their short-term energy outlook for pricing. So they're anticipating some strengthening as we go through the latter half of this year and into 2024, and settling around that $80 per barrel mark throughout much of that 2024 period. Again, last month when we looked at this, it was a much more pessimistic view until that OPEC decision, and then the elective decision by Saudi Arabia for the curtailments. You'll see a slight color change in this graphic, and that would be the Demicks Lake 3 facility that One Oak had placed into service. So it used to be colored on here as planned or under construction. It's now just wrapped up into the existing plant capacity, and no other projects at this time publicly announced But as I just mentioned a moment ago, that does not mean that folks aren't aggressively working on those type of solutions. And we'll touch here in a moment on a couple of the larger scale systems when we look at egress for the dry gas molecules from the Bakken. Northern border now hovering again around 80+% of northern border's flow is Bakken gas, 20 to less than 20% coming from Canada. And so that timeline is ticking of when we expect to start hitting some ceilings on our ability to continue to market gas on that system. We also saw some abrupt shifts coming into June on BTU on northern border. For a while, it was trending, down in that 1080 range, and just in the last several days, we've seen a jump back up. Again, a lot of that has to do with what folks are electively doing in the Bakken relative to ethane, whether they're putting it into the natural gas liquid stream, whether they're putting it onto northern border and trying to get the residue dry gas pricing. And so we'll continue to watch that and what implications that may have long term. And now, again, the big question of when and what type of solutions are coming in to help address at least the transmission piece of North Dakota's challenges. Happy to discuss that Kinder Morgan and TC Energy here in June are launching a binding open season for what was formerly known as the Basin xPress. Now it's referred to as the Bakken xPress project. They did allude to in their open season documents that do have enough precedent agreements in place that they will be moving forward with this project. So we can now move this from proposed to it is moving forward. They're now just trying to wrap up if there's any other interest from parties to sign up for any additional capacity on that. This is one of two projects that are in the works to get North Dakota gas down to the Cheyenne hub. At the Cheyenne hub, there's a couple different options, whether it continues to flow east, whether it could flow west through some of the Rockies interconnects. But this is definitely the largest at 430,000 decatherms per day, which in general terms is roughly 400 million cubic feet of gas capacity per day. This does have some FERC requirements to go through from a regulatory standpoint. So they're targeting March of 2026 for an in-service timeframe. The other project that I don't have a graphic for is the WBI Grasslands system, which is a roughly 90 million cubic feet per day system, which is very similar, leaves the Bakken and then interconnects to Kinder Morgan's Fort Union and WIC systems on its way to that Cheyenne hub. The benefit of the WBI system, it's a smaller scale, but they're able to get it done in a much quicker time frame from a regulatory standpoint. So that system should be online late this year with an additional 90 million of capacity than this one because of the compressor upgrades in the Bakken. And then again, the overall costs push it to the full FERC regulatory process. So with that, I'd be glad to answer any questions.
Still has to be some regulatory authority for the transfer of that. Is that done?
A great question on the regulatory steps that I don't have off the top of my head how that's going to proceed, both at either the Public Service Commission because it's a liquids system, but then also at FERC for that shift in ownership. But likely there certainly is going to be some regulatory steps. I don't know what type of time frame that will take.
Any nibbles on getting the line from the Bakken to the eastern North Dakota?
Great question. So if you didn't hear that online, question of, again, the state has had an overarching goal of trying to deliver Bakken gas as part of that solution through North Dakota to either delivery points in North Dakota or to interconnecting systems and opening up access to gas supply in areas that are currently underserved. And the answer is absolutely yes. I'm even as late as a couple hours ago having more discussions about it. So it is actively being worked, but it may be some time before we have any type of public details of what it potentially may look like or may not look like. So,
but suffice to say, there's still interest out
there. Certainly, yes, both from an egress side from the producers needing and looking at additional takeaway options, as well as the economic development side of using that gas within the state. Okay, thank you.